Good afternoon. This is Brian Split with Allendale here for your closing commentary for the week ending Friday, December 2nd, 2011. And with 2 trading days during the month of December come and gone, we do have some mixed settlements for the grains today. First thing noted is that the funds do still carry a long position in corn while they are short soybeans and wheat, so keep that in mind. But as far as what we did today, March corn down 6 1/4. Our settlement was 5.95 1/4, and that is up 5 1/4 on the week. The DS12 contract down just a penny today at 5.53 1/4, and that is actually up 17 3/4 cents on the week. As far as soybean trade, January soybeans up 7 3/4 cents at 11.35 3/4. That is up 29 1/4 for the week. The November 12 contract up 6 1/2 today at 11.55 1/2 last trade. That is up 36 cents on the week. And in the wheat market, we did have March Chicago up 11 1/4 at 6.25 1/2. That is up 36 1/2 on the week. The March Kansas City contract up 12 1/2 at 6.81 1/2. That is up 27 1/2 on the week. And the March Minneapolis contract up 13 1/4 today at 8.45 1/2. And that is up 38 cents on the week. Now we do have pressure in corn continuing from poor exports. We had the first week last week with prices back below $6 a bushel, and yesterday we received the export numbers that suggested that prices have not moved low enough yet to really stimulate demand. So with that being said, we also have talk of a record crop in China, up about 8.2% year over year, and that is causing some continued pressure in corn. Now, as we said earlier, the funds are long corn right now, and they are short soybeans and short wheat. So any kind of position squaring going into the end of the year will require the funds to go ahead and sell corn and buy beans and buy wheat. So we are seeing some spread unwinding very evident today. Now on top of that, the funds seem to be covering short positions in soybeans, not only because of some of the most recent technical trade, but there is some rhetoric of some dryness developing in South America. It is just a very early stages of dryness, but it is something to talk about. And if you consider the idea that most of the rhetoric for soybeans for the past several weeks to months has been bearish, with record plantings in Brazil, great conditions, great weather, there's not a lot of risk premium in this market, if any at all, and we might have some risk premium to be put back into this market if this dryness does continue. Moving into the wheat, we've had, again, the funds, recent position, the shortest position since 2006. And again, if there's going to be any short covering, that market needs to be bought by the funds. We do have a streak of 4 lower weeks of trade in wheat broken by the higher settlement this week. The exports really have been steady, and we continue to see mainly demand for higher protein or high quality wheat. So the actual physical demand going to the Minneapolis contract and the Kansas City contract. But again, keep in mind that most of the fund activity is going to maintain positions in Chicago. And there also is recent talk that Ukraine may need to be a net importer of wheat in the 12-13 season due to lower than expected harvest results this year. So we'll keep our eyes on that situation. But as far as the meat trade today, we did have some pressure develop, especially in the hog contracts. The last trade in the late Globex in December down 132 at 86.25. The February down 105 at 89.22. Now we also did have the cattle markets breaking late in the session. A little spillover pressure from the hogs, but December down 15 at 121.75 and February down 67 at 123.05. Now, as far as that late break in the cattle, again, some of that may be some spillover from the hog pits, but also we did have a nice run up over the course of the week due to expectations of a winter storm this Saturday. Now, we also had a little positive economic news to help things out, but one thing that we're watching here, and possibly could be one of the reasons that we did set back late in the session is that boxed beef has been moving lower. We had $1.55 lower in choice and $1.20 lower for select, so that is keeping pressure on things. And with some of the gains that we saw because of the storm or anticipation of the storm, in reality the storm is supposed to hit tomorrow. That means we've got the rest of Saturday and Sunday to clean up, so it should not be too much of a big deal for the cattle market big picture. As far as the hogs, we were thinking we might get a seasonal rally. It does not seem to be shaping up here. Usually we get a little bit of a bounce here, and then going into the last part of December we'd start to see a seasonal decline. With that little bump not looking to come into play here, we've had cash hogs down 2 days. Maybe we're already going into that seasonal break in hogs, so again, something to keep an eye out on. But some of the developments we've seen in the big picture this week stemmed around central banks around the globe coming together to raise, or I should say, lower interest rates on dollar swaps. Again, making it easier and cheaper for banks to access liquidity. We also had the People's Bank of China lower their reserve requirements on banks, and China's actions over the past almost 3 years have been more tightening monetary policy, so this does break that trend. And if we do continue to see China loosen monetary policy in the next several weeks to months, that could help support commodities as a whole. So what did we get as far as economic news today? We had some non-farm payroll numbers. We added 120,000 jobs, and that was about what the market had expected, but unemployment rate down to 8.6%, which is the lowest since March of 2009. So the market is seeing that as supportive. We had Dow futures up approximately 30 points at 12,033. The S&P up about 4 points at 1247.5. Looks like crude oil futures up about 75 cents at 195. Gold trading about $11 higher at 1750. Silver down just about a nickel at 32.71. And this is all with the dollar index actually reversing to higher trade today, up 26 at 78.70. Now, a couple things beyond the market. If you are somebody in Minnesota or the vicinity, we are inviting you to a Farmers State Bank agriculture meeting that it will take place on Wednesday, December 7th. Allendale's own Paul Georgie will be one of the speakers. If you can attend, please give us a call here and let us know so we can save you a meal ticket. You can contact us at 1-800-2-MARKET. That's 1-800-262-7538. And also, again, a reminder that our own annual conference will be January 20th and 21st. And if you haven't already, please reserve your spot for that. Right now, if you do reserve your spot and pay before next week, you will be entered to win an iPad too. So a little extra incentive to reserve your spot sooner rather than later. And again, if you do have questions, please look us up online at www.allendale-inc.com. And again, 800-2-MARKET, 800-262-7538. And good luck trading to you next week. Thank you.